Hello everybody, my name is Alesh Eisner and welcome to the Canadian Money Talk, the channel about Canadian investing and personal finance. Please like and subscribe. I record 2 videos per week, so make sure you ring the notification bell to get notified each time one comes out. This is my thoughts on market happenings for the week ending February 4th, 2022. The indexes for the week are all up in the US and Canada, with oil breaking through the $91 mark. Markets were up and down the entire week with a lot of volatility. From a US Fed survey, the US Fed will increase interest rates 3.7 times in 2022 on the average. So some of the members said 3 times, some said 4 times. Also, generally for the market, analysts are very split on whether the bottom is in for the correction that we are going through. Now, this past Wednesday, the US private payrolls cut 301,000 jobs for January, the first loss since 2020. But US weekly new jobless claims totaled 238,000, fewer than expected. January saw the US add 467,000 jobs, surprising economists and analysts who expected that Omicron variant disruption might have a deeper impact. It seems that there's a small Omicron effect on company reporting in general. It's a reminder of how much of the US has decided that COVID-19 is not a cause of huge concern, and also that the US economy is fairly hot. Therefore, we have the inflation. We had some company reporting. So Alphabet beat on top and bottom lines and surged 7.3% in the aftermarket. And they also announced a split of 20 to 1 of its shares, finally. General Motors beat on earnings but missed on revenue. Meta/Facebook shares plunged 26.4% after missing on earnings, even though they beat on revenue. Amazon had a monster quarter, with the AWS Amazon Web Services surpassing expectations, and revenue from AWS growing 40% from the previous quarter, from 50 billion to 71 billion. Amazon had a volatile February 3rd, where it dropped 6% throughout the day and then jumped in the after hours after the report. These movements on such a large company is making investors scratch their heads about the volatility in the markets. And also on Thursday, the US oil prices topped $90 a barrel for the first time since 2014, showing how a lack of investment in the quote-unquote dirty industry and political tensions can bring an uninvestable industry back to life. The European Central Bank had a decision date, and they kept interest rates the same but discontinued the bond buying on Thursday. Bank of England, however, raised interest rates. In Canada, the GDP for November monthly growth came in at 3.8% annualized, with 3.6 expected, showing the economy is strong despite COVID. The Canadian economy lost 200,000 jobs in January amid stricter public health rules put in place to slow the variant of COVID-19, but signs point to a temporary wound rather than a drawn-out recovery. The decrease marked the largest drops in January 2021, when the economy shed 207,000 jobs, Statistics Canada said on Friday. There was an expectation of some small losses, but the number of losses surpassed the expectations to the negative. The job losses also pushed the unemployment rate to 6.5% in Canada last month, compared with 6% in December, jacked up quote unquote entirely by those temporarily laid off or scheduled to start a job soon. The number of Canadians looking for work hardly budged, the Canada agency added. So we had a bit of a split in Canada as far as the GDP, which is looking strong, but then we had the job losses, which are making things a little bit weak. but I don't think that there's any impact on what the Bank of Canada is going to do in March with the interest rate. Next week, the quarterly reporting continues. So on Monday, we have Alibaba, Canada Goose. Wednesday, we have Disney, Manulife, Sun Life, and Great-West Life reporting. Thursday, we have Pepsi and Coca-Cola, Constellation Software, Brookfield Asset Management, and TELUS. Friday, we have Enbridge, Cineplex, and Fortis. On Thursday is also the CPI report in the US for January. The CPI and core CPI report comes out Thursday pre-market. Economists expect CPI to come in at a 0.5% increase month over month and 7.3% year over year, with core CPI, excluding food and energy prices, also expected at a 0.5% month over month and 5.9% year over year, with rumblings that the Fed might not only hike 4 times this year, but also jump straight to a 0.5% hike in March. This report is going to have real weight. That concludes the weekly report. In summary, the economy is looking fairly strong in the US. We have good GDP growth in Canada, and we had some job losses, but those appear temporary. It's still looking like both sides of the border will increase interest rates in March. I'm wondering if it's just going to be a token increase and then they'll reevaluate, but we're still looking to be on track to increase by at least 0.25% on both sides of the border. So if you have any requests on what you would like me to cover in future videos, please put that into the comment section. Please like, subscribe, ring the notification bell, and may you have a profitable day.